Hello, welcome back to my YouTube channel. Today we'll try to understand equity mutual funds in a detail. For an individual investor, it is difficult to take out time, analyze hundreds of stocks from the stock market and create a portfolio. So here, equity mutual funds can help you. In case of equity mutual funds, fund houses create a pool of money and invest into stocks or equity related instruments. These funds are managed by professional fund managers. These fund managers have years of experience and expertise to invest into stock market. They take decisions on behalf of individual investors and try to maximize the return in the long term. Equity mutual funds primarily invest into stocks of publicly traded companies. Fund managers will select the stocks based on the fund objective and strategy. Fund objective can vary widely from investing into a particular sector or investing into companies of particular market capitalization to pursuing value investing. Now let's try to understand types of equity mutual funds. Type 1, large cap funds. In case of a large cap funds, fund managers invest into the companies who have a considerable market capitalization. These companies have a longer track record to analyze. Investing into large cap funds might not give you exponential returns, but the risk associated with these funds is also minimal. Type 2, mid cap funds. In case of mid cap funds, fund managers invest into the mid-sized companies. These companies have a considerable growth potential in upcoming years, but along with the growth potential, these funds also carry a higher risk as compared to large cap funds. Type 3, small cap funds. In case of a small cap funds, fund managers invest into small but emerging companies. These companies will have considerably higher growth potential, but along with the higher growth potential, it comes with the higher risks as compared to large cap and mid cap funds. The companies in small cap funds might not have larger track record to analyze. Type 4, sector funds. In case of sector funds, fund managers select stocks from particular sector. Like there will be a fund who will invest into particularly IT industry stocks. It is called IT sector fund. There will be some funds which will be allocated designated for manufacturing sector or pharmacy sector. These sectors focuses on a stocks from particularly from only one sector, and the performance of the sector is tried to be replicated in these funds. Next type is thematic funds. In case of thematic funds, fund managers will try to accumulate the stocks from the industry which will follow particular theme. These themes can be like renewable energy, artificial intelligence, or the companies supporting EV revolution. Next type is multi-cap funds. In case of multi-cap funds, fund managers will have flexibility to invest into companies from different market capitalizations. Then, while creating the portfolio, there will be some large cap stocks, there will be some mid cap stocks, and there will be some small cap stocks. Now let's try to understand how investing into equity mutual funds can benefit an individual investor. Number 1, diversification. The key benefit that you guys will get by investing into equity mutual funds is diversification. An individual investor will get an exposure to large variety of stocks across various sectors. So this helps to reduce the risk and also reduce any adverse impact on your portfolio if there is any sudden movement in a particular stock. This means that if there is any bad news for a particular company in your portfolio, that stock can go down drastically, but the impact of that drastic movement will be very less as compared to the overall portfolio movement, because fund managers try to minimize such kind of risks with the help of proper diversification. Second key benefit that you guys will get is professional management. Equity mutual funds are managed by skilled and professional fund managers. These fund managers do thorough analysis and research before selecting stocks for your fund. Also, on ongoing basis, these fund managers analyze market trends, analyze company performances and economic indicators to take a wise decision so as to maximize the performance of fund, in return the performance of your investments. The third benefit of equity mutual funds is accessibility. For an individual investor with a limited capital and limited knowledge of a stock market, it becomes difficult to select stocks. So equity mutual funds provide an opportunity and easy accessibility for individual investors to get into stock market and get exposure for wide variety of stocks with a diversified portfolio. Fourth key benefit is liquidity. Equity mutual funds provide liquidity to individual investors. That means they can buy or sell units in their account and get money in return of that. This money varies as per the net asset value prevailing into the market. So whenever they require money, they can just sell off those units and get money into their account directly. Another major benefit of investing into equity mutual funds is getting tax benefits. In India, if you invest in equity mutual funds for a longer period, that is for more than 1 year, then the gains will be taxed under long-term capital gains. The tax rate of a long-term capital gains is less than the short-term capital gains. Additionally, if you invest into equity linked savings schemes, This will qualify to get a income deduction under Section 80C of Income Tax Act. By primarily investing into equity and equity-related instruments, ELSS aims to get a long-term growth and try to outperform other tax-saving options. But here is the catch. ELSS comes with a 3-year lock-in period so as to encourage investors to think long-term. To summarize, equity mutual funds provide an opportunity for individual investors to participate into potential growth of Indian stock market. And also it helps to mitigate the risks with the help of professional management, get tax benefits, liquidity, and accessibility to stock market. That's all for today, guys. Thank you for watching. If you have liked this video, please like and subscribe and share it with your friends and family. Thank you for watching. Until next time, happy investing. Bye.